And again, folks, if you want to get wealthy, if you are an everyday wealth builder, the secret to this is there is no secret. You have to own assets. You have to own assets for a decade, and that's how you get wealthy. This is not about get rich quick. This is not about replacing your income in 24 seconds. This is about getting wealthy over a decade. And these are the moves. These are the cycles. These are things that don't bother us because we know it's just all part of the journey. Looks like asset owners are about to line up at the ATM machine. What the heck am I talking about? Well, folks, on Friday, we got the horrible jobs number. More on that in a minute. But what you saw by the end of the day, folks, was the largest one-day drop in mortgage rates in a long, long time. Mortgage rates for a long time were bouncing right around 6.5. In fact, we celebrated on this channel Wednesday when they finally broke below 6.5 and they posted a whopping 6.49. Yes, 6.49 was market moving at the time. And then Friday happened. Friday, folks, I'm not sure if you know how unusual this is. Mortgage rates dropped 16 basis points. That is more than an eighth. We are now sitting at Friday close at 6.29. I thought if we got below 6.4, that would be considered a big move, and it would have. But now we're sitting at 6.29. Last May, just for comparison's sake, we were at 7.08. So we're roughly 80 basis points below last May. And based on what I am hearing in the last 48 hours or so, we are starting to see asset owners, investors, reach out to mortgage brokers and either A, talk about refis, or B, not only rate and term refis, but we are hearing more and more about cash out refis. This is what I'm referring to as the ATM. People are going to go back and extract dollars. Now, if you want to be a doomer or a fear monger, you could talk about this just blowing up the bubble. You could talk about this being a sign of distress, which clearly in some cases it is. Some people are desperate for cash. However, this is just part of the cycle. This is exactly what I thought would come. What do I mean by that? Well, if you remember, I think it was 10 weeks ago, might have been 8 weeks ago, I postulated with Lance Lambert from Resi Club in one of our videos and said that August was going to be the last terrible month. I said that September would be the month that we finally get off the bottom, right? August would be the bottom, and September we would be feeling better. At the time, people thought I was crazy. I don't know. What do you think now? What do you think? The data came in exactly as I expected, with more on that to come. We got a big number on Tuesday, and Tuesday could be market moving. It frankly will be market moving, and we'll talk about that in a minute. So again, I don't know about you, but I am once again looking at my portfolio, looking at some of the assets perhaps that I own free and clear, and going, you know what? Is it time to crack the piggy bank? Go get some additional liquidity and pounce on some of these deals? Maybe. And if I'm thinking about it, I know lots of other investors are as well. And again, folks, if you want to get wealthy, if you are an everyday wealth builder, the secret to this is there is no secret. You have to own assets. You have to own assets for a decade, and that's how you get wealthy. This is not about get rich quick. This is not about replacing your income in 24 seconds. This is about getting wealthy over a decade. And these are the moves. These are the cycles. These are things that don't bother us because we know it's just all part of the journey. If you are part of our One Rental at a Time school community, I do want to do a couple of things. First, remind you that at 8 o'clock, so 26 minutes, we are going to be going live talking about co-living with Jared. Jared is one of our school members. He'll be speaking at our Vegas event, and he will be going live telling you all about co-living. Let's also congratulate Jonathan, was our latest member to join. Thank you, Jonathan. And finally, never forget that Mark, the financial firefighter, still has a couple of more seats left. If you want to give us a try, reach out to Mark, and he will reimburse you for your first month. So again, you can basically try risk-free by working with Mark, the financial firefighter. Reach out to him. He has the link, and he'll take good care of you. Let's talk about next week. Next week's a big week. Monday, we get consumer credit. Tuesday, we get small business survey. And then the most important number, we are going to get a revision, a jobs revision for the last year or so. Last year, the revision was 818,000. That's pretty much what cemented the 50 basis point cut last September. Again, it is coming on Tuesday. Goldman Sachs predicts that the revision will be bigger than last year. Yes, Goldman Sachs says that this year is going to be bigger than 818. They say it's going to be 950,000 negative. And again, this is something I thought is coming for a long time, and why I am standing on an island with a 50 basis point cut. That's what I think is coming. 50 basis points on September 17th, largely because of this jobs revision. And just to be clear, Goldman says 950. I am at over 1 million. I believe this jobs revision will be over 7 figures to the negative. And just so you know, even at 950, this will be the largest negative reduction since 2010. No bueno. Not good. So that's coming out on Tuesday. That will be market moving. Then we start to get our inflation readings. On Wednesday, we will get PPI. Thursday, we will get CPI. CPI is expected. CPI headline is expected to rise from 2.7 to 2.9. And core is expected to stay flat at 3.1. Thursday, we will also get weekly unemployment claims. They did tick up slightly last week. We are always watching the weekly numbers because, yes, they are noisy, but they do show a trend. Don't ever get too fixated on 1 week, but zoom out a little bit and watch where the weeks are going. We are always looking for early signs of a ramp up in weekly unemployment claims. And then finally, on Friday, we will end with consumer sentiment. What is going on with the consumers? Other things we could talk about. Let's talk about the jobs number on Friday. Again, the jobs number on Friday led to a collapse in the 10-year note, collapse in mortgage rates. Again, getting in below 6.3. Really, there are a couple of numbers in there that I thought were most interesting. First, the headline, only 22,000. And again, folks, never forget that revisions could take that negative. In fact, talking about negative job growth, we have our first negative month of the year. The July numbers were revised to negative 13,000. Negative 13,000. This is not good. The other thing to remember is these numbers were first reported at 155,000. So think about that. They were 155. I think they were lowered to like 30,000, and now they're negative 13. So the fact that we got a positive 22, that could be negative with the first revision. The job market is not strong. So again, this is what we thought. This is what we thought would happen. And it's all leading to my call that August will prove to be the bottom in housing and mortgage, the mortgage industry, especially mortgage brokers. I think mortgage brokers are going to see the first burst, almost a mini refi boom. Then you're going to start to see home purchases pick up. Because again, folks, even if we go from 4.3% unemployment to 4.5%, even if we go to 5%, if you flip that coin over, that still means 95% of people are employed. A lot of those folks have been waiting on the sidelines. And if we truly continue this fall in mortgage rates, you're going to see a very strong fall, as I expected. Let's talk about some Fed presidents. We got Fed President Goolsbee out talking a lot. The economy shows shocks are pushing the U.S. in a stagflationary direction. Let's never forget that Anna Kelly was the first person I knew to talk about stagflation. She did that about a year ago. I got to tell you, she is looking brilliant with that call. Again, we're going to have subpar growth, maybe 1%, and inflation running at, call it 3%. Very stagflationary environment. And of course, then we have the Fed. And as I've said for quite a while now, labor over inflation. We're going to find out September 17th when the Fed meets. On top of that, Goolsbee is saying, must make sure service inflation wasn't a blip. This is important. This is what was buried inside PPI last month. It wasn't goods inflation that shocked me. It was services inflation. So when we get PPI on Wednesday is PPI, that's going to be important to see if services inflation was a blip or are we starting a very negative trend. Goolsbee says he's still undecided for September. I think that's hogwash. Job growth definitely below break even. And then finally, labor market could weaken and inflation could increase. Hello, stagflation. Let's talk about Bank of America. Bank of America for a long time was in my camp where they were saying no cuts in 2025. If you watch this channel, you know that I changed that. I changed my call. What was that? 8 weeks ago when we got those horrible revisions down. I said, game over. We're going 50 in September. Bank of America says, well, we were wrong. We now forecast 2 rate cuts. So Bank of America has gone from 0 to 2 rate cuts. We did get talk from Fed President Williams. It may take a long time to gauge full impact of tariffs. Rates will eventually be lower than today. Folks, I do want to remind you, if you bought tickets to the ORAT event in Vegas in August, you did get an email from me yesterday morning. What I did is I went to Eventbrite, and all of you had to use an email to buy your tickets from Eventbrite. What I did is I got your email address and I sent you it in a blind copy email directly from me. And I gave you a link to Wednesday at 6 p.m. Pacific. Now, I don't normally do evening sessions, but I thought it was so important to thank you that we will be going live Wednesday at 6 p.m. In that email yesterday, there is a link to that Zoom meeting. And then second, I gave you some options to get some credits to my courses. So all you have to do is reply to that email with your choices, and I will manually add them. So give me 48 hours after you reply, because again, I don't have a VA or a team. I will be sitting down daily to add courses. So thank you for that. And don't forget, folks, if you haven't bought your tickets yet, please do it today. We will be doing the same thing for September purchases. If you buy your Vegas event in September, you will get the opportunity to interact with me in October, and you will get $100 in free credits. You could buy the Get Your Money Right course, Buy Box, Out-of-State Investing, Dan Bird's Risk Management for Stocks. Whatever you think is important to you, you can get for free as a thank you. So again, buy your tickets. Let's get this thing sold out so I can stop talking about it. So again, don't forget to go buy your tickets today. I'll put a link in the description below. Fed President Williams talking about, I already did that. Rates are going to be lower in some time. Mark Zandi, that's where I wanted to go next. Mark Zandi, we are in a full-blown labor recession. Big talk. Risks spilling over to the rest of the economy. He thinks the U.S. is on the edge of a cliff, kind of like Wile E. Coyote, kind of hanging there. Mark Zandi is pretty negative on the U.S. economy. And how about Redfin? Redfin must be listening to me. I'm telling you. Housing costs could return to normal by 2030. 2030. Incomes must continue to rise, aka inflation. Prices will be stable, i.e., 0% increase, and rates will fall to 5.5%. This is how we slowly grind back to better affordability. This is exactly what I told you happened from 1978 to 1994. It doesn't snap back. It's a slow grind to get away from the worst affordability levels to better affordability. And again, you can find that all in my 50-year spreadsheet. I think that's all I got for you today. Folks, don't forget, if you are a landlord, you got to try steadily. Landlord insurance is going up. You might as well see if you can get a better price. But don't forget, don't forget to compare your sheets to see if they're actually giving you the right coverage. Again, steadily provides coverage for dog bites and replacement costs and all of those things. So again, give them a chance. If they can help, great. If they can't, congratulations. You already have great insurance. All right, folks, take care of yourself. And don't forget, if you are a part of school, we will be going live in about 14 minutes. Thank you. Take care. Bye.